Welcome and hello everyone. This is Michael from smartEn. This is the webinar on scalable innovative financing for smart buildings. I would like to start with a big thank to the other two organizers, the City Networks Climate Alliance and C40 Cities that helped smartEn to organize this webinar. We have a long list of participants joining us from actually all over the world, from Japan to Canada, from US to across Europe. So thanks a lot. Anyway, there is going to be the webinar is going to be recorded and we are going to share the link when finished. Let's have a look at the agenda. As you can see, we will have some welcome and introductory remarks from my side. And then there will be 3 sessions, specifically focused on 3 different innovative financing schemes: energy performance contracting, on-tax financing and on-bill programs, and crowdfinancing. For each of them, there will be 2 interventions, a business perspective and a local experience. After indeed these 2 speech by the business and the local representatives, there will be Q&As opportunities for all participants. So I'm addressing directly to the ones that are listening. You will see that indeed in your panel, you will have a dedicated session that is named questions, and you just simply need to type down your question and send it to us. I will moderate these questions and I will address your questions to the speakers. And then indeed we will conclude with some remarks. So let's start with indeed a short presentation of smartEn, so the business organization that I'm working for. smartEn is the European Association of Market Players driving digital and decentralized energy resources. Here you see a list of them. And these companies are, of course, providing technologies or services to drive the uptake of smart buildings. So what is a smart building? Smart building, it's actually it's an energy infrastructure that is fully part of the energy system. Smart buildings, in smart buildings, there might be electric heaters, air conditioners, water boilers, batteries, on-site renewables, and other electric devices, for example, smart charging for electric vehicles. They are all connected, and thanks to automated demand-side management services, that can shift the electricity consumption of these appliances, of these devices, to better respond to the needs of the electricity systems and also the occupant. This is what we call the implicit demand-side flexibility. In addition, by bundling the multiple customers' loads from these individual smart buildings, to respond to electricity market signals, final customers in these smart buildings have the possibility to sell their flexibility to electricity markets, with potential monetary gains, of course. So in a nutshell, all digital decentralized energy resources in buildings enable occupants to reduce their energy consumption and cut their energy bills, while empowering consumers to participate in electricity markets, and thus even allowing them to earn money from the demand-side flexibility of their own smart buildings. We believe that indeed smart building should be the aim of each renovation. There are some potentials forecasting, in particular in Europe, on the uptake of smart buildings. The Commission indeed estimates that the number of smart homes in the EU specifically is expected to increase tenfold by 2021 compared to the current levels, so to reach 80.6 million of smart buildings. However, how is it possible to arrive to these numbers and further increase in the long term, where we should have highly efficient and decarbonized building stock across the world and not just in Europe? Financing is key to drive this renovation of buildings up to smart buildings levels. And so, to date, the financing landscape has been dominated by bank loans, subsidies, grant programs. But however, there are some innovative evolution of indeed innovative financing models, which do not require either taxpayers' money or burden users with private debt. However, these innovative schemes are not well aware. There is no great awareness of these schemes, and this is indeed the objective of this webinar, to make sure that good financing is helping to tripling the renovation rate, and so without negatively impacting the financial health of citizens or burdening public budgets. We have addressed these schemes in a publication of smartEn. You see here the front page. You can download actually not through the hyperlink, but on our website. And we believe indeed that cities, local authorities, municipalities are key players to unlock this financing for smart buildings. And indeed, we are going to have some overviews of these different financing schemes. As I said, let's start with the energy performance contracting, and I will give the floor to Constance Speaking, Director of Government Affairs Relations for Honeywell, that is going to provide us the business perspective of EPCs. Constance, you have the floor.
Thank you, Michael. Good morning, good afternoon, and good evening. It's my pleasure today to talk a little bit about energy performance contracts, which is a highly efficient financing tool to increase the energy efficiency of buildings. Before I do so, let me please mention a word about Honeywell, the company. Please go to the next slide, and how we fit into the broader Honeywell International. Honeywell is a company with a rough turnover of $35 billion annually. We are divided into 4 businesses: aerospace, performance materials and technologies, safety and productivity solutions, and the business which I'm presenting today, which is the home and building technologies business. Next, please. We are a US headquartered company, but are present in most markets on the globe, and generate our revenue 2/3 outside of the US. The home and buildings technology business covers sort of the entire pyramid, as we call it, from energy efficiency management in buildings, starting from environmental sustainable services, the EPCs, the energy management, and then the actual energy retrofit. Next, please. What drives our business are really 5 triggers, which are, first of all, the client demands increasing, as we also just heard from Michael, the market demands. Then in most parts of the world, the environmental regulations are getting stricter. Owners demand lower operating costs for their buildings, and then overall, we believe it's the right thing to do. Next, please. We have been following very closely the recent EU energy directives, in particular the Energy Performance of Building Efficiency Directive and the Energy Efficiency Directive. Both have been discussed and published last year in the EU and are currently being transposed into national laws. And both really create a very strong incentive for the establishment and creation for smart buildings, insofar that they demand mandatory requirements for building automation control system as the basis of a smart building, but also create incentives for innovative finance schemes, in particular for the energy performance contracts. Next slide, please. What is probably the most important change, which really woke us all up here in the EU, is the change to the Eurostat accounting rules, which were also published last year. The big change now is that that energy performance contracts, the EPCs, can now be off balance. So they are not anymore creating debts for municipalities and cities and local governments. They don't need to have an upfront investment from taxpayers' money, but they can be done. Energy retrofits can be done so-called for free for public governments. And on the next slide, I will explain a little bit in very rough terms how those energy performance contracts are working. You will need, if you're a local municipality and you decide, for example, to energy retrofit your universities or public schools, and ESCO, for example, Honeywell, will come in and will first calculate very thoroughly the energy and the operating costs of the building. It will then install from its own money, which is loaned from a bank, the energy retrofits in the building. It will enter into the contract with the owner of the building and will pay for this retrofits for the of the savings which are done at the energy for the energy costs. So the owner of the building, the municipality or the city, will pay the continuously same energy costs it has paid before entering into the contract for a certain period. Normally those contracts run a minimum of 8 years, sometimes up to 15 years, but it will receive at the end of this period a building which is absolutely energy efficiently equipped. So basically a municipality has insofar the possibility to upgrade all the buildings and making them smart, making them energy efficient without using taxpayers' money. So that's really the beauty of this system. It's not that that's new. It has been around for the last 20 years. It's used widely in other parts of the world. But those rules which existed in Europe, that they had to be on balance, was seen by most market players and stakeholders as the biggest obstacle for public authorities entering into energy performance contracts. So just as you see on the next slide, just for Honeywell, we have done in the last 20 years, we have generated a revenue of federal buildings, energy performance contracts in federal buildings in the US of $1.4 billion compared to just $100 million in Europe. So we are expecting really the huge marketing opening here in Europe. This is just a short overview. I mean, what kind of buildings can be retrofitted and with what kind of retrofits. And it shows also that the typical transaction value sort of is between 500 and 2 million euros per building. I would like have a last couple of slides. Excuse me, we are now at the Benelux slide, slide 10. A recent retrofit we have done is the University of Antwerp. We've introduced, measures such as controls and air handling units, optimization, lighting, combined heat and power, insulation, humidifiers. I mean, all possibilities. There are many possibilities what you can introduce: building management controls, building automation control system, making the building smart. In order to achieve the energy efficiency which is requested to pay for those measures. Another big project of Honeywell which I want to present is the Peterborough City Council. There we have retrofitted swimming pools, 33 schools, sports centers, with also a wide range of measures, with a guarantee saving over 15 years of 7.9 million British pounds. Under the same umbrella, we have entered into a phase A big recreation center, library, central depot, and phase 2 is also just currently under design for 15 years. The saving of phase 1 of just phase 1 was 3.2 million pounds. Now, if we come to my last slide, it's just to show you Honeywell has wide experience in that field. We have completed over 5,000 efficiency projects and have with them saved 5 billion in energy and operational savings around the globe. I herewith hope I have not overdone my 10 minutes, and I'm happy to take questions after the session.
Thank you very much, Constanze, for your presentation and overview of EPC from the Honeywell perspective. I will encourage indeed participants to ask questions, and indeed you have this possibility to interact with speakers, so use this possibility. In the meanwhile, I will give the floor to David Musselman, the director of the Municipal Energy Unit of the City of Boston in the USA, to give his municipal experience of EPCs.
Okay, we can go to the next slide. So the city of Boston is obviously greatly impacted by climate change. We're seeing it already. We've got 47 miles of coastline. We're seeing flooding. We're seeing increased heat. And so we've made significant carbon reduction goals, seeking to get to carbon neutrality by 2050. We're updating our carbon action plans across the city right now, developing resiliency plans for neighborhoods. We've entered into a study process that we're actually releasing a study next week called Carbon Free Boston that we did with Boston University and a number of the Green Ribbon Commission, which is made up of a number of businesses, institutions, and governmental organizations in the Boston area that are trying to give us tools to figure out how are we going to get to a very aggressive goal. I mean, it seems 2050 seems a long way off, but when you're making decisions about a building that's going to last 20, 30, 40, 50 years, you need to start making those decisions. So we are taking a number of different approaches to try and reduce our carbon impact. And one of them is a program we call Renew Boston Trust, and we are trying to model energy performance contracts so that not only will we receive the benefits of them, which are, as Constance pointed out, lower operating costs, better buildings because you've improved the infrastructure in them, lower carbon footprint, but we're trying to model that as an approach that other institutions can take. So if you could take my next slide. So we in Massachusetts have adopted a law that's very similar to the federal law, which Constance touched on before, where in the US, the federal government has spent over $4 billion in total. About a third of that apparently went to Honeywell, which coincidentally is also the contractor we've selected. So the Massachusetts law is very similar to that. It requires us to identify and implement energy conservation measures that must reduce energy use or water use, or that can generate renewable energy. It can't just save money so that while we do get some value from being able to shift demand and to be able to reduce peak use and other things like that, if that's all a measure does, we can't use it. We use the savings to fund this, and because the savings are guaranteed, they have to, by statute, be guaranteed by the EPC contractor. They allow us to borrow more money. In our case, although Honeywell would have loaned us the money, we're a AAA rated city. Our decision was that we are going to finance this through bonds, general obligation bonds, and we are looking at doing this through a green bond issuance. And we believe that because of the nature of the work that we're doing, it will qualify for that. And because of the guarantee from Honeywell, we can make the representation to lenders or bondholders that there is a guaranteed revenue stream from either the savings and utility bills, or if there's a shortfall and we don't actually achieve the savings that Honeywell's guaranteed us, that Honeywell will write us a check and there will be sufficient money to service the bonds. Can you go to the next, please? So it was a slower process than we would have liked. I'm not going to spend a lot of time on it, But because it's a new process for the city, and the city, being, 390 years old, has very entrenched ways of doing things, in particular construction, we had to do a lot of internal education as well as selecting the vendor and getting through the process. But we have just signed our first phase of work, which is $10 million worth of work that we're going to do that will save us about $780,000 in the first year after the work is complete, and will pay for itself in about 15 to 16 years. We've been authorized to do a second phase of $35 million, and we're currently in the process of selecting the buildings that will be included in that. So we initially had a list. We have a list of about 300 buildings we're in. We've looked at a subset in the first phase of 38. We're actually doing work in 14 of the buildings in the first phase, and we're going to look at another set of probably 60 or so buildings and expect to do work in about 30 in the second phase. Next slide, please. So I'm sorry. So we're doing 72 different measures. 4 buildings we're going to do what we call deep dives. These are things where you go in and you replace the boilers, the heating, ventilation, air conditioning, or HVAC. You seal the building up to make it tighter. If there isn't a building management system in place, certainly in the larger buildings, we're ensuring that they have it, or we're upgrading it and we're retro commissioning it to make sure that it is actually working. And the expectation is that the building management system, or the, I guess you would say, what makes it a smart building, will allow us to better manage how the energy is used, but also to evaluate whether or not we're achieving the savings that we expected, because we'll see how the buildings are performing. We'll be able to identify issues more readily, go in and fix them. We're expecting it will help us with preventative maintenance, and so it should reduce the overall life cycle cost of the buildings. We're also doing 3 photovoltaic installations as part of this under a power purchase agreement, and the savings from that are helping to fund our renovations. The buildings that we're working on range from buildings that were built in the 1880s to the 1980s, I think, in this phase. There are libraries, there are police stations, there are fire stations, there are central library, our police headquarters, recreation centers, swimming pools. So it's a lot of the same things that Constance touched on. Next slide, please. So we had received from Honeywell a guaranteed maximum cost of $9.3 million. After we get utility incentives, we have for-profit utilities in the U.S. That's not true, everywhere, but that's common here. And they have programs where they pay their customers to reduce their use. So we're expecting about $780,000 in incentives, which help buy that cost down from over 10 million to under 10 million. The annual savings, I see I left off is 0, but it's $780,000, a 16-year payback. We're saving nearly 3 million kilowatt hours each year, 49,000 therms of natural gas. We also run a steam system. There's steam savings associated with this. We're going to generate about 430,000 kilowatt hours per year of solar power, and are reducing our emissions from municipal operations by about 2,000 pounds, or about 1%. Next slide. So I think that's everything I was planning to talk about. So we'll entertain questions.
Thank you very much, David, for your presentation. We received some questions, but in particular one, we needed to stick unluckily to one, because otherwise we will not be able to address the other sessions. It's related indeed to the fact that EPC do not only boost the energy efficiency measures to reduce the energy consumption, but also the uptake of decentralized energy resources. You, in particular, David, mentioned the photovoltaics, so renewables. The question is the participation of buildings to electricity markets, to value their demand response or anyway flexibility to electricity markets might generate some revenues. Are these revenues potentially going to reduce the EPC fees that you need to pay back to the company that is offering an EPC?
The answer is yes. So the way the statute works in Massachusetts is we can't do something that only reduces demand. It has to actually reduce consumption. But many times, if you're reducing consumption, you get the benefit of demand reduction, and those savings do count towards the total savings that we have that we're using to fund these uses or these retrofits.
Good, thanks a lot. And Constanze, maybe do you want to express something on that?
No, thank you. No, I'm fine. Okay.
Okay, so indeed, thanks a lot to Constanze and David for your presentation on energy performance contracting. Now let's move to the second session on tax financing and on build programs. I would like to give the floor to Kristina Klimovic, the head of communication and marketing for G&E Finance. Kristina, you have the floor.
Thank you very much, and it's a pleasure to be here. So G&E Finance really stands for Global New Energy Finance, and we're a financing solutions provider based in Barcelona and Amsterdam. And today I'll talk about two financing tools, on tax financing and also on bill financing, and then I'll cover our flagship initiative, which is called EuroPACE. But before we dive into financing solutions, I wanted to say a few words about the policy context, and I'll also echo some of what Constance said earlier today, that the cost of inaction is really too high at both European and global levels. And in Europe, we have clear climate and energy goals set in the Paris Climate Agreement, but also in national legislation and EU level directives as well. And we really see it as an opportunity not only to improve energy efficiency, but also to increase connectivity of buildings, the demand side flexibility of buildings, and also add renewable energy as well. And we also have to think about how to improve the lives of European citizens and connect that to buildings. And by that, I mean, we need an additional focus on indoor environmental factors like air, noise, light, and temperature that all impact health, well-being, and productivity of all Europeans. So overall, it really presents quite a challenge. We not only need to increase the rate of renovation from currently 1% in Europe to 3%, but do it in a way that it benefits all European citizens. So it's been estimated that we need over 100 billion euros annually just to invest in energy efficiency to be on track. So financing is absolutely part of the solution. So let's go to the next slide, please. And we need to work together to really leverage both public and private financing in order to achieve the results. So in our view, there is really no one size fits all solution, but instead we really need to find a mix of financing options to address different barriers. But these financing options should have certain common features, such as affordability for all European citizens, and also long-term, that aligns well with the useful life of the improvements. Also, the ease of access is quite important, and digital and fast approvals. And what do I mean by that? And it's really the fact that home renovation specifically, it's complicated, it's time consuming, and it's usually a multi-stakeholder process that involves several actors that can take several days of your life. And we as an energy efficiency community, as an energy efficiency finance community, ought to provide financing tools that help minimize that burden, that help simplify energy efficiency financing, essentially. So let's really take a look at two financing tools. First, on-bill financing. And this is a very simplified diagram. The key here is really repayment. So it's called on-bill, mostly because it's repaid through a bill, which is a utility bill. Usually we have several actors involved in such a program. The homeowner is in the center, then the utility is the one that provides, that transfers the funding to the energy services contractor who performs the work, and the homeowner simply repays that obligations through an addition on a utility bill. And it also allows the homeowner to see the savings right away. So utility run programs tend to vary from place to place. There are several in the US, and also there are a couple in Europe. Each program really addresses its own needs of the market. And from what I've seen, usually these programs are created by the utility, but also spearheaded by the utility, not the city usually. So again, just to summarize this, the key here is that on-bill financing is all about collection and repayment on a typical electricity or energy bill. And the advantage is that financing is detached from an individual obligation. So it's not like an individual personal loan, but it's attached to the bill and hence to the property. So now let's go to the next slide to look at on-tax financing. So I purposefully kept the diagrams sort of similar to give you a sense that both financing mechanisms are really focusing on that attachment to property and repayment and collection mechanism. So typical on-tax financing is even called on-tax financing because the majority of programs are based in the US, and there it's collected with a property tax bill. So the repayment, a homeowner essentially repays the financing extended to him or her annually as an additional charge on his or her property tax bill, which allows the investors to get that sort of additional sense of security because the municipality has a lien on the property that primes the existing mortgage, which really allows the investors, private investors, to extend funds for longer periods of time to the homeowner. So, but essentially, the programs are, in a way, they're a bit similar to on-bill financing because it's all about collection and repayment and separating the obligation from a person and attaching it to the property. And the programs also vary quite a bit from place to place. The setups vary. For instance, at the top, you see the two blue circles, one with the local government and one with the home renovation programs. There's quite a bit of complexity there on the ground, meaning the local government could function as a home renovation program in itself. Also, a home renovation program could be a private actor that comes in and works under subcontract for a local government. So there's definitely a lot of flexibility, and on-tax financing is a very flexible and adaptable financing tool. So the most well-known example of an on-tax finance scheme is called PACE financing, and PACE stands for Property Assessed Clean Energy. I see that on the slide some of the things don't display well, so I'll just talk you through it. So the original PACE program started in the US in 2008, actually in Berkeley, California. So, and currently the US market is quite developed and mature. And in fact, nearly $6 billion was spent on energy efficiency, renewable energy, and water conservation improvements. Just on the residential side, the commercial market is also growing. Similar programs have started in Australia, where they're called environmental upgrade agreements. There is also some development in South Africa, Canada, and China as well. And GNE Finance is leading the charge in Europe. And EuroPACE is our flagship initiative that focuses on adapting the PACE model from the US to the European market. Thank you. So EuroPACE is a Horizon 2020 funded project, which means it's funded by the European Commission. And the goal of the project is really to make home renovation simpler, affordable, and reliable for all Europeans. And we really see it as a combination of two elements. And one is that financing that is detached from an individual and attached to a property, and that is quite long term, but also the people-centric implementation, which means making it simpler, easier, faster through a one-stop shop that is created in a tight collaboration with the city. Next slide, please. Thank you. So let's examine a couple of features of financing. So EuroPACE provides 100% financing upfront, which means that homeowners don't need to front any money, essentially. So it's also long term. It can be extended up to 25 years, and it's well aligned with the useful life of the improvement, so it can range quite a bit. It's attached to a property, and it transfers to a new owner upon sale. The simple repayment usually happens through an existing bill that a municipality would send to a homeowner, and it can range in different countries in Europe, from typical municipal charges to even maybe a property tax bill. So it really has to be adapted to the local legislation and the local context. And it can fund a variety of improvements as well, ranging from energy efficiency, renewable energy, water conservation, and in some places we're looking into accessibility improvements as well, such as elevators and fortified stairs too. And currently, homes, apartments, and multifamily buildings are eligible, so essentially the whole residential segment. The next slide, please. Great. So a couple more words about the EuroPACE project itself. As I mentioned, we're funded by the European Commission. It's a 3-year project, and GNE Finance is one of 7 partners, one of 8 partners leading the project. And essentially, there's 3 main elements to the project. One is to assess the market readiness. So to do that, we're analyzing the legal, fiscal, and market context of EU 28 to assess which countries are best suited for EuroPACE implementation. In parallel with that, we're designing and deploying a pilot in Olot, Spain, and I will talk about that just in a couple of minutes in more detail. And the last step is to scale the EuroPACE program to 4 additional cities in those countries identified in step 1. So let's go to the next slide, please. So the pilot for the EuroPACE program is located in Olot. And Olot is a relatively small city north of Barcelona, just about an hour drive north in Catalonia region. Olot has a population of just over 30,000 people, and the city has been on the forefront of sustainability for years. They've done a number of initiatives focusing on healthy and sustainable buildings, but also various other initiatives with more environmental focus as well. So EuroPACE was almost a natural fit for them. And the next slide, please. And clean energy transition is really local, and Olot is demonstrating how cities and public authorities can lead the way. And on the left, you see the quote from a mayor of the city of Olot when they decided to join the EuroPACE project and really adapt the PACE mechanism from the US to Europe. The one element that was really crucial to them was that EuroPACE focuses on the so-called triple bottom line. We're looking at the economy benefits, the benefits for the society, and also the environment as well. And the buildings and the people's well-being is kind of at the center of all of that. The next slide, please. So the implementation of the pilot is taking 3 main steps. So the step 1 is to change the legislation at the national level in Spain. And We've been working to that effect for the past year, and we've developed political support from local governments, from communities of businesses, but also groups of local governments that would like to develop EuroPACE programs as well. And we've proposed an amendment to the existing to the newly proposed climate law in Spain that would allow the city of Olot to implement this new innovative financing tool building on the US example. Since the collection happens with a municipal bill, that is why we need a specific change in the local and national legislation. So in parallel with that, in the step 2, we've been working on citizen engagement and designing a program that really works best for the local circumstances, and also that brings together all the elements of this complex and multi-stakeholder home renovation process and makes it streamlined and simple for people. And lastly, it's the design of the financing instrument that can be scalable to other communities and also regionally as well. The next slide. Thank you. Oh, so we have some animation here. But on this slide, I wanted to share some of the very recent findings of a phone survey that we conducted in Olot at the end of last year. And what we learned is that 70% of Olot citizens responding to a survey said that lack of financing, lack of technical knowledge, and complexity of the works really prevented them from renovating their homes, which to us really is another way of saying it's an assurance that EuroPACE program is targeting the right barriers. It's really lack of financing and the so-called technical assistance element. The 56% of citizens reported that family well-being was one of the main reasons they renovated their home. And here again, it's completely in line with what EuroPACE believes in as a group, that people don't buy energy efficiency. Instead, people are more attracted to emotionally charged benefits like health, well-being, productivity, comfort, and things that are more close to the people-centric perspective. And then a couple more numbers. So it's not a surprise that 36% of Olot citizens trust energy services contractors with home renovation advice, and EuroPACE program plans to train and verify all contractors participating in the program. And lastly, 24% reported strong interest in such a program and even shared their contact information with us for when the program is operational. So overall, for us, it's a very positive result that affirms a lot of our original hypotheses and helps to put us even further down the road on this pilot development path. So let's go to the next slide. So the expected income in Olot, but also in the region, really goes beyond just energy efficiency renovation, and energy savings. Well, the first point is really it's about training of local contractors, local craftsmen, and engaging them in the process early on. It's also about economic activity, greenhouse gas reduction, and empowering citizens to make better energy efficiency choices. And lastly, we have a number of components that focus specifically on energy poverty and energy poor regions of Olot itself. Next slide, please. So as I mentioned before, scalability is really one of the key elements for both PACE program in the US, but also for EuroPACE in Europe. It's designing a scalable and standardized financing instrument that will allow us to reach volumes and attract even more investments and also reach the impact we intend to. So the next step for us is to scale to the region of Catalonia. Oh, sorry, just a couple more words about the previous slide. Thank you. Which is a region with a population of over 7 million people. As you can see, the calculation on the right is modeled really based on the success of the PACE mechanism in the US that shows some sort of an exponential growth and development. And the next slide. And lastly, to summarize, we believe that comfortable and healthy homes should be a reality for all European citizens. And I know some of you are joining from outside of Europe, so for all citizens globally. And EuroPACE intends to make this complex home renovation process simpler, but also provide the affordable and reliable financing. And on-tax financing and on-bill financing in general, we don't believe they're a silver bullet for all cities, but there are two new tools that can actually be added to the toolbox of municipalities and regions and public authorities in order to develop better home renovation programs that can help scale and reach our European policy and energy goals, but also global ones. On the next slide, please. And the last thing I'll say about the EuroPACE project is that our next step is looking for 4 leader cities to scale the EuroPACE model outside of Spain. And we will be looking for leader cities from Austria, Belgium, Netherlands, Portugal, Italy, Romania, and Poland. So thank you very much for your attention. I look forward to questions.
Thank you very much, Christina, for the clear presentation, and also thanks for taking over the part that should have been covered by Jordi, the program manager from the city of Olot from Spain, that unluckily could not join us due to last-minute commitments. Questions, indeed, Christina. You highlighted several times that these programs are attached to the property. And so indeed, in case of change of ownership, they are they're remaining to the property. But is it limiting the sales market or not? Indeed, I can imagine, I mean, I can maybe interpret the question. If I'm buying an apartment that has a specific value, but also I needed to take into account that there are some additional payments that are indeed attached to the property, is it limiting the sale market, even if the building had an improved performance, improved comfort? What is your experience?
Thank you for the question. No, it's definitely, it could be an issue. That would be a short answer. And a longer answer is really that we need to look at buildings in a more holistic manner. So when 2 properties are presented, you're right that if you look at it from only the point of view of taxes and assessments and additional charges attached to the property, it may look as if one property clearly has the additional charge that may be less attractive to the buyer. But then if one were to look at the energy performance of a building, but also the measures that were installed, especially if those were long-term payback measures like windows or roofs or specific insulation, that really makes that home more energy efficient, but also more comfortable and healthier than the other building, then I think the story becomes clearer. So in the US, there was a couple of studies done on this topic, and it actually showed that resale values of properties with a PACE attachment, a PACE charge attached to them, were actually higher. And that it was a fairly small sample, but it showed that the resale value was higher on a range of something like $800 to $8,000. So, and I'm happy to send that information on as well. And in Europe, it still remains to be seen, since that we're developing the very first pilot. So we'll certainly engage with the local realtor community as well, and we'll make sure that the story is told in this holistic way about the building itself and not just about the charges attached to it.
Very clear, and thanks also for the numbers and figures that you provided, Christina. Another question, do the financial savings have to exceed the costs? For example, would energy efficiency measures with a payback period longer than 25 years be eligible? And what level in percentage of energy savings are being achieved from the pilots?
Yeah, that's also a very good question. And again, the answer is really, it will depend on the local circumstance and the local goals set by the public administration. So what do I mean by that? In general, we definitely would like to strive for a result where savings exceed the amount of annual repayment. But there will be situations when we're dealing with low income or distressed areas where accessibility improvements such as elevators, stairs, or certain facade improvements need to happen before a deeper energy efficiency retrofit will take place. And some of these measures can be financed through the program as well, but then we would have to be more creative with financing tools and how to make sure that the low-income communities living in those buildings do not have an additional burden, let's say. So basically, on-tax financing is really a flexible tool, and we can make sure that it fits in the local circumstance. But overall, the goal is to make sure that savings exceed the annual repayment. And the second part of the question regarding the renovation level. So under the EuroPACE project, which is funded by the European Commission, we strive to achieve deep energy retrofits. And we're specifically not clear about the exact percentages because we want the cities to lead according to their existing energy transition plans.
Thank you very much, Christina. Thanks. So we will now move to the third session on crowd financing. Indeed, I encourage once again participants to write their question and use this opportunity to clarify some of the issues presented by the speakers. So indeed, let's move to the third session on crowd financing. We have as a first speaker Benedetta Friso Bellemo, Director of Sales from Joule Assets, that is going to provide indeed the business perspective of crowd financing and in particular of the EQUAD platform.
Yeah.
Benedetta, you have the floor.
Thank you. Thank you, Michael. Thank you for having us here. And what I'm here to present today is, well, us, Joule Assets Europe, our IT platform, which facilitates the access to finance for small and medium sustainable energy projects across Europe, and then to introduce you to crowd financing as a concept, as this innovative financing option, and in particular, one of our partners who joined us today and is presenting after me, we are starting as well from Italy. Next slide. So first, who are we? Joule Assets was born in the US as an investment fund for sustainable energy assets, and then opened as a European branch in 2016 to share this US experience and support the development of the small and medium energy efficiency and renewables market. To do so, we started SIF, 2 million euros Horizon 2020 project, which had the purpose of creating a framework for sustainable energy assets, and then turned into EQUAD, our EQUAD platform, which was launched commercially last May. And what do we do as Joule Assets Europe specifically? On one side, our activities aim at creating the market itself through the EQUAD platform. So the first area of activities turns around EQUAD, and to create the market, we do that by supporting small and medium energy service companies to access appropriate finance for the projects, to present themselves effectively to financial institutions, and by providing preliminary due diligence for investors. On the other side, we work as well to shape the market as we are very active in stakeholder engagement. We participate, as you can see, in several European projects. We are in EuroPACE as well, in Novice, in Flexicency, and we are also member of different associations across Europe to shape both the European and the national markets. So we are in smartEn, of course, we're in FIRE in Italy, the Green Building Council, both in the UK and Ireland. Let's focus on the creation of the market for today mostly, which is what really matters in terms of innovative finance. How does EQUOD work, and how do we support ESCOs and engineering firms and construction companies to access appropriate project finance? So we do that by first providing third-party financial valuation of the project, and also technical if needed. We support in the access to performance insurance through a quicker and cheaper mechanism through the platform. We do that by offering an international project certification in partnership with the Investor Confidence Project, ICP. We provide ourselves a preliminary due diligence of the project financials and the contracts. And finally, we do that with the introduction of projects to our investor partners, where we assist the project developer throughout the journey, through the negotiation with investors until the final handshake. So why is the EQUOD platform particularly important for this process? It's because of the way the sustainable energy project market is currently structured, which is made, as we all know, of mostly small and medium projects, which seemingly cannot access appropriate off-balance sheet finance. And thus impede the project developer to access not only finance for their projects, but also growth finance more in general, and thus to be able to sell their projects and to do appropriate sales and marketing, and then to have enough projects to present to investors. The barriers that we find within the market to appropriate project finance are, well, first, size and scalability of projects, then for a high performance risk for investors. There's a lack of standardization of projects across, but also within European countries. There's also a lack of financial knowledge on the developer side. There's a balance sheet burden that all these developers have. So how do we address these barriers through EQUOD and with our activities, as Julia said? So, but first, we support the developer through the creation of umbrella contracts to bundle together their projects similar with equal capabilities. We support them through the creation of appropriate SPV structures. We offer, as I mentioned earlier, this performance risk mitigation through performance insurance when necessary. We support the correct development on EPC contracts as well, because there are several standard EPC templates that we support within specific circumstances, because it's really important to make them adaptable. And finally, what really matters eventually is that we offer innovative ad hoc financing solutions from different financing sources. As you can see here on the slides, that depends on the specific needs of the project developer or the specific projects itself. We have within our network investment funds, banks, high net worth individuals, and crowdfunding, which is what we are introducing here today. So let me just give you a quick overview on what crowd financing means. Crowdfunding is a source of finance, it could be equity, it could be debt, where the money comes from small investors who invest through a certain platform that selects opportunities. Crowdfunding has some very interesting benefits for investors, because it increases their risk tolerance by offering greater portfolio diversification and small amounts of investments. It's really important because also supports responsible investments, because investors have greater control over projects and their results. It also makes investments faster thanks to standardized online processes. But at the same time, it's really what it's important to stress is it's really much more than a financial tool, because it gives eventually citizens the chance to not only to benefit from this energy transition in terms of environment, in terms of social benefits, etc. Christina mentioned earlier, but it's a way for citizens to engage practically in this energy transition and gain financially out of it. So at the same time, on the developer side is particularly interesting, because it's a way for them to do advocacy as well, and to use these platforms as marketing and communication tools to both create sort of advocacy within the communities and eventually reach out to new potential local customers. Yes, here you can see just 2 examples of European crowdfunding platforms. One for debt and one for equity. For debt we have eCrowd in Spain, and then an equity-based crowdfunding, which is we are starting. You're gonna hear all about it after my presentation. The last thing I'd like to mention about crowdfunding is the potential link that crowdfunding can have with blockchain, and the potential benefits it can gain from asset-backed tokens that use blockchain. That has been proven particularly important to reduce fraud and increase transparency, and that's to increase the trust and security of participants in these investments. You can read all about it there are a couple of interesting examples in smartEn's Scalable Innovative Financing for Small Buildings paper, and you can download it in smartEn's website. So that's all about us and crowdfunding. Just a quick note for in case of some cities are here today, or project developers have some energy efficiency or renewables or demand-side generation projects, and they want to know if there's innovative finance available for them. You can just click on this link and you'll be able to access our project survey. If you enter some very basic information on the project, we can let you know straight away if they fit our investors' investment criteria. I won't go over this slide in depth. I put it here for downloading purposes. You can see an example of one of the projects within our platform. This is particularly interesting for our purposes because there's a mix of technologies from energy efficiency, small renewables, and there's also the possibility to carry out demand response. And it's also, I find it very interesting because it's from a housing association in the UK. So it's really important, as Christina was mentioning earlier, for our a more general social cohesion scope, because it shows how energy efficiency and renewables projects can be an effective way to tackle energy poverty. And if you want more information, just feel free to reach out. And this is just a quick example of our participation in terms of research and advocacy. We had the pleasure to support the International Energy Agency in one section of their last report, on energy efficiency report in October, where they talked about EQUAD as a market enabler. And in our website, you can also find our last paper, the Sustainable Energy Asset Framework, where there's a description of our 2 years experience through CEF, our Horizon 2020 project. Thank you. Back to you, Miguel.
Thank you very much, Benedetta, for your presentation on the EQUAD platform and also on crowdfunding. And now I would like to indeed give the floor to Carlo Levi, Operation Manager of We Are Starting from Italy. Carlo, you have the floor.
Thank you very much. As Benedetta was already saying, investment crowdfunding is definitely one of the options for scalable, innovative financing for smart buildings. It is scalable for two main reasons. Because there is no risk of concentration because the investments are distributed across a large number of investors. And B, if the project itself or the sponsor performs well, there are many opportunities to increase the amounts raised thanks to a number of factors. Presence of investors already on board, word of mouth, media coverage, and web presence. Next slide, please. Most of the companies that raise money through investment crowdfunding are small and medium enterprises, since larger companies, of course, already have access to capital through more traditional systems. Our portal is an equity crowdfunding platform, which is active in Italy. So please be aware that some of the indications in this presentation may be slightly different if you consider lending-based crowdfunding or other countries. However, let's focus on the Italian local case. As you can see from the parameters set to identify small and medium enterprises according to the EU definition, most of the early stage companies, and of special purpose vehicles can raise money thanks to equity crowdfunding. Of course, this happens on an authorized portal such as We Are Starting. Next slide, please. Generally speaking, equity crowdfunding, as Benedetta was explaining, is not only about money and returns. There are many other benefits you can easily imagine, even when applied to projects associated with smart buildings, especially if these buildings are open to the public and host businesses. For example, I anticipate we will talk about the case of the publicly owned sport palace, where the matches of a top Italian volleyball team are played. So keep an example like this in mind. The secondary effects of investment crowdfunding campaigns can be the creation of connections with existing and potential customers and supporters, the opportunity to evaluate the interest of the public in some products or services, communication and marketing benefits, and the creation of new business opportunities thanks to the media coverage as well. Next slide, please. The main challenge when it comes to energy efficiency is related to the lack of effective funding and management options related to energy efficiency for renovations. especially in a country like Italy. Many of the obstacles hindering the development of this market that has, as we saw in the prior presentations, has a huge potential, can often be solved thanks to equity crowdfunding that is a very inclusive solution. Next slide, please. Now I want to talk to you about a real success case that was completed on our platform. It is actually the first equity crowdfunding campaign completed for an SPV associated with an energy performance project. It was the first one listed on the European portal Cities Energy that lists all the crowdfunding campaigns for green businesses. Benuco, in this case, next slide please, is called Energy Efficiency Sport Busto Arsizio. Busto Arsizio is a municipality with more than 80,000 inhabitants in northern Italy. This NewCo raised 65,000 euros out on a total investment of approximately 330,000. The goal was to find the money to renovate the sport palace. Most of the remaining portion of the investment was notably obtained thanks to traditional credit from the banking system. Well, a diversified group of 18 investors, some individuals and the others companies, provided the funding and obtained shares equal to approximately 34% of the company itself. The intervention planned is very simple and includes improvements on the heating system, on the lighting system, and also on the envelope. Thanks to this pilot campaign, we discovered that equity crowdfunding for these types of projects work and generates a lot of interest. All the involved parties, such as the municipality that owns the building, the company managing it, the contractor, and the supporters of the local sports team are enthusiastic about the process. In fact, each of them obtained several benefits from this, and most of them agree that the intervention would have hardly become a reality without this equity crowdfunding campaign. Even the traditional financial system saw the innovative financing solution for this project positively and took part to the funding. On the negative side, despite the high interest generated by the campaign that took place during the summer last year, few average people invested in the company. In fact, not too surprisingly, most of the investors have some knowledge of the sector or work in the energy efficiency sector. Interestingly, few of the contributors managed to get involved in the works of the project actually. One of them did not take part to the works, but is a manager of a large number of swimming pools that is interested in renovating them and wanted to discover how the process works. So this campaign also led to some lead generation for future renovation projects. However, if we want to raise a large amount of money for energy performance projects, we know we need to bring non-experts on board. Next slide, please. Investors do not have a clear understanding of the business models associated with energy performance projects. So we need to describe the business model in order to make it easy to understand. We need to work on the storytelling and to show the results of companies that got funded. Looking at this specific topic, interestingly, one of the companies that took part to the funding with a small amount is a startup that adapted its solution for energy monitoring and dynamic control to make it easy to understand even for non-experts. You can see on this slide on the right a mock-up of the specific dashboard they have built. Through this solution, people will be able to understand more by monitoring the parameters in the building and KPIs. We also plan to focus more on the expertise and on the reputation of the subjects involved in the projects in order to increase the confidence by non-expert investors. And on the marketing side, an important opportunity is to create win-win rewards, incentivizing the participation of investors. Some examples can be tickets, discounts, or advertising opportunities. If we're talking about museums or sport palaces, this is very easy, for example. The availability of co-investment schemes from public or private investors could speed up the spreading of equity crowdfunding for these kinds of projects as well. More in general, a more friendly and defined regulation could help the sector. It is worth mentioning that the European Union is currently discussing a unique investment crowdfunding regulation, which could be valid for all the European Union. Of course, this change will create a very interesting environment even for renovation projects. As said earlier, the first pilot projects involve very simple interventions. However, we expect and we hope that more complex solutions to make buildings smarter will be the focus of some of our future campaigns. In fact, we are building a pipeline of projects where energy communities with distributed energy production and the storage and also demand response solutions that are quite in line with the concepts of crowdsourcing will play a key role. If any of the participants have real cases to work on which could benefit from a financing through equity crowdfunding, we are more than open to discuss it. Well, thank you for your attention, and I'm available to answer any questions you may have.
Thanks a lot, Carlo, for your presentation. A really innovative way of financing energy projects. Yes, we have several questions actually, so I'm happy that and I'm glad that participants are interested in this specific session. First one, it's more related to the time. So how much time does it take to collect enough money to finance a project through crowdfunding? Is the time component a key element to identify whether a crowdfunding can work or not?
Well, this is a very good question. Equity crowdfunding has three different phases. The preparation, which can take just a few weeks, 3-4 weeks. but only when, of course, the technical documents and the business details have already been defined. Of course, for example, there is a document setting up the increase of capital, which needs to be prepared and discussed with professionals. So this paperwork requires some time that makes the preparation time up to few months sometimes. The length of the campaign itself is typically 2-3 months. As I discussed, we are starting with smaller campaigns, and we are increasing the size of campaigns with time. So now we are confident with campaigns in the range of 100,000 euros, for example, but we hope we will soon be able to propose larger campaigns. Finally, the last phase is the follow-up. Of course, you need to keep people informed, and this is an everlasting process, but you can see it as an opportunity rather than just tasks or duties.
Very well, thanks. Another question on the return on investments by the individuals that are, but actually I would say not just individuals, by all the ones that are participating to the crowdfunding. How are they calculated?
Yeah. Please consider that in general, equity crowdfunding was started with the financing of innovative startups and innovative companies. So it is much easier to define a return for energy efficiency projects. You know the share of the company you are putting on the market, so it is easy to identify a reasonable return on the investment. In addition to that, in some countries, such as Italy, there are tax breaks for the investments in innovative companies, and some of these projects have nice technological and social innovations, which make them eligible for these tax breaks that boost the return on the investment.
Good. Another question, can investors have a role in defining the type and quality of the energy solutions that are going to be installed in the projects once financed?
This is a very good question. I believe we will get there, but at this point, people are not too familiar with equity crowdfunding in general, are not familiar with energy efficiency, as I mentioned in my presentation, so it would be a bit confusing. But I'm really sure that as the community will grow, these crowdsourcing activities will become more relevant and interesting. I can say that there is a lot of offline contamination between parties involved in the organization of the campaigns and in the financing of the companies, but this is still quite an offline process.
Good. We have a few minutes, 6 minutes actually to the end, but indeed I would like to ask you these last two questions, as indeed, there is a bit of space. One is related to blockchain that was indeed actually mentioned. Are there any barriers identified for the use of blockchain for crowdfinancing in the energy sectors? Are there problems related to the governance, the performance, the security of the use of these of the blockchain?
It is a very, very complex question. Short answer is that I'm pretty sure that in a few months or years from now, some of like the property, the shares of companies will be tokenized, and this will be a compelling need as soon as the framework for secondary trading of equity crowdfunding portals will become a reality. In our specific case, we are in a discussion with the regulatory body in Italy to get clarifications. We will get there. At the moment, the need is so compelling, but it would open up a lot of possibilities, especially related to the participation with voting rights, for example, and the handling of the real benefits for shareholders. So it would be really useful, but we are not ready yet. I think it will need some more time to become reality.
Last question for you. Indeed, you talked also a lot about not energy experts to engage them in this crowdfinancing. What are your marketing activities to engage them?
Well, we work on different channels. Most of them are web-based. We try to let media talk about the projects and equity crowdfunding in general. On top of that, for these kind of campaigns, there can be some collaboration with local entities. For example, we had the support of the municipality of Busto Arsizio in our project, the one I described earlier. This is very good to bring people on board, because someone which is in the network of the people, someone they trust, endorses this innovative tool.
Thank you very much, Carlo, and good indeed clarification on this new financing scheme that indeed is attracting apparently also a lot of attention, and it's clear from the questions that were asked. So indeed, some concluding remarks. First of all, thanks a lot to all the speakers and for the large number of participants. We had seen a lot of three actually example of innovative schemes that are not going to put a burden on public budgets and also on citizens' savings. We had a key understanding that the energy transition is local. So cities, citizens needs to be involved and will lead a successful energy transition. Across all these innovative financing, there was, I would say, a focus on energy efficient solutions, but not only. The uptake of renewables, but also weight efficient water use were also raised, that are indeed all of them key elements in the digitalization and decentralization of smart buildings. And indeed, smart buildings are going to have a key role to enable households and different final customers to become active players of the energy transition. There are indeed some European estimation that by 2050, about 83% of the EU households could potentially become an active customer and contribute to the renewable energy production, to demand response, energy storage, that will amount indeed in total to around 187 million households to be active players. So indeed, financing is key. These the schemes that we have highlighted need to be well known, and indeed there are business perspective, local experience that are there and needs to be their benefits needs to be spread further to make them successful. Thanks a lot for your participation. Goodbye.